A few years ago, I found myself staring at my bank account wondering where all the time and money had gone. I kept thinking if I had only started investing earlier, even just $100 a month. But I didn't, and that decision still hits me hard today. So if you're just starting out, here's what I wish someone had told me back then. My name is Darren, a regular Canadian who became a passionate investor at 50. I share my real lessons from the markets as I document my journey, and I'm still learning, so you guys don't have to learn the hard way. If I started investing with just over $100 a month in 2025, here's exactly what I would do. Now, I know $100 doesn't feel like much. It's easy to think, what's the point? But what if I told you that small amount could unlock the hardest milestone in all of your personal finance journey? It's something that I did not fully understand when I started. But once you get there, everything starts to change. And I'll come back to that in just a minute. First of all, let's talk about strategy. If I had invested just $100 a month starting at the age of 18, at this point now, I'm 52 years old. I would have put in about $40,800. But when you add just a modest 7% average annual return, that could have grown to over $130,000 by now. That's the magic of compounding. Your money earns returns, and then those returns start earning returns too. Now here's where it even gets more powerful. What if you added just $10 more per month every single year? So year one is $100 a month, year two is $110 a month, year three is $120 a month, and so on. That's like skipping one lunch out of every single month, or canceling one streaming service. A small change, right? But by the time you're 50, like I am, that could mean a portfolio worth double, closer to $250,000 or more, depending on how long you keep going and how much you add. And just to be clear, this doesn't mean that you have to live a miserable life eating crackers in the dark. Like Ramit Sethi says in Money for Couples, you can still have a great relationship with money and enjoy things you love. Saving and investing isn't about saying no to everything. It's about saying yes to life, a life you actually want to live down the road, so the earlier you start, the more consistent you are. Even with tiny increases, the harder compounding works for you. With just $100 a month, keeping things simple is key. No stock picking, no timing the market. Let's say you're ready to start now. Where do you begin? So here's a sample portfolio using ETFs that I actually hold. VFV or VOO for exposure to the S&P 500 for strong long-term growth. XIC to own the Canadian stock market. XEF and XEC for international and emerging markets exposure, and XEI for Canadian dividends, because who doesn't like to see some of those dividends flowing into your portfolio? This kind of mix gives you global diversification, access to different sectors, and long-term performance. For context, the S&P 500 has returned around 10% annually over the past 30 years. Or, for simplicity, you could invest in an all-in-one fund like XEQT, VEQT, or ZGRO. These are one-ticket ETFs that hold Canadian, US, international, and emerging markets all in one. Now, these are just examples, and there are plenty of other ones out there that you would have to ideally make a choice about. You don't need to overthink this. If you're younger and you can handle some ups and downs, like recently with the Trump tariffs, 100% equity ETFs like XEQT or VEQT make sense. If you prefer a little bit more safety, something like ZGRO gives you a mix of stocks and bonds. These are the set it and forget it type of investments. To keep track of all this, I would use Wealthica. It shows me my TFSA, my RRSP, RESP, and even my brokerage accounts all in one dashboard. I check my dividend income, sector exposure, and it can even see when I'm overinvested in one area without using a bunch of spreadsheets. And the cost is pretty low for this. And to stay consistent, especially with small contributions like $100 a month, I would use Passive. It connects with my brokerage and shows me exactly what to buy to stay aligned with my plan. I've used it since day one on this channel, and it's been a key to automating absolutely everything. And it's been super helpful when I'm rebalancing. I'll be using it every single month in these videos to give you real-time updates. And it's free for most of the features. The link is in the description below if you want to get started with it. Here's how I'd get going today. The first thing I would do is open up a TFSA with Wealthsimple Trade. It's beginner friendly, it has a very sleek interface, and it has absolutely amazing customer service. And there are lots of other brokers out there. For instance, I've used Questrade as well. And while it offers tools like Norbit Gambit for cheaper currency conversion, my personal experience with their app, and more importantly, their support, hasn't been very good. So I always say, start with the platform that makes you want to keep investing. For me right now, that is definitely Wealthsimple. Then I'd automate my contributions with Passive. It monitors everything along with Wealthica, and you're able to buy something simple like VFV or XEQT every single month. Now let's get back to what I had said earlier. You've probably heard this saying before, that first $100,000 is the hardest. And it's true. Not because the math is different, but because this is the stage where you're learning. Discipline, fighting self-doubt, and investing without seeing any big results yet. But once you hit that point, everything accelerates. You've built those habits. The compounding starts to feel real. And if you're doing this with a partner, this is where your values start to matter even more. Ramit Sethi has a great concept called follow the money. It's not about tracking every single expense, it's about making sure your money is going toward the life you actually want. So when you invest $100 a month into something like XEQT, you're not just buying a piece of the stock market, you're buying peace of mind. You're buying time and freedom and options. That's the power of starting early, even with just $100. If you want to see how I actually built an ETF portfolio with these exact tools and ETFs, you need to check out this playlist right here. I walk you through my real portfolio and show you how I manage it day to day using the same tools I talked about today.